As you may have heard, Warren Buffett's company Berkshire Hathaway built a big position on one stock in the semiconductor industry in third quarter. The semiconductor companies have been hit hard since the beginning of 2022. However, Warren Buffett's cheap stock purchase is hailed as a classic example of why you want to be greedy only when others are fearful. You may wonder why Warren Buffett invested a large amount of money while the industry is still in crisis. Other stocks in the semiconductor companies are good contrary investing now. Based on its filings with the Securities and Exchange Commission on November 14th, Berkshire Hathaway built a position worth $4.1 billion in Taiwan Semiconductor Manufacturing Company between June 30 and September 30. Based on the real-time stock codes from Yahoo Finance, the stock's price is about 79 at the end of June and about 67 at the end of September. It reached as high as $92 in the middle of August. Now let's find out why the semiconductor industry was hit so hard in 2022. The first reason is falling PC demand. During the pandemic in 2020 and 2021, high demand for personal computers led to manufacturers placing a large number of orders to produce more chips. However, that demand fell in 2022. Given that the orders chip makers placed couldn't be cancelled, the PC market now finds itself oversaturated with semiconductors. The second reason is smartphone weakness. Smartphones are actually the biggest market for chips today, and that's been seeing a lot of weakness. Concerns about falling consumer spending in the event of a potential recession would put a limit on growth in the smartphone semiconductor market. Now let's come back to the stock of Taiwan Semiconductor Manufacturing Company. When Warren Buffett purchased stock in third quarter, the stock was down between 35% to 41% for the year. For the whole industry, the semiconductor ETF hit 2022 closing low in the middle of October when it was down 44% for the year. Since then, it has risen 25%. As Warren Buffett is famously quoted, "We simply attempt to be fearful when others are greedy, and to be greedy only when others are fearful." Based on his investing strategy, we have reasons to believe the semiconductor market has probably reached the rock bottom. Another piece of information we want to pay attention to is Dow Jones US Semiconductor Index. In late 2021, the index was high as 9,700, but it dropped to 4,700 in the middle of October 2022, a more than 50% decrease. Based on the forecasts of World Semiconductor Trader Statistics, the market is expected to grow 16.3% in 2022, reaching $646 billion. In 2023, the market will continue to grow by 5.1%, reaching $680 billion. In the long term, McKinsey analysis suggests the industry's aggregate annual growth could average from 6 to 8% a year for the next 8 years, reaching $1 trillion by 2030. So it's reasonable to assume the semiconductor industry is probably recovering from its worst recession in a decade, and will continue to grow for years to come. In order to profit from this industry, you can purchase stocks from semiconductor companies like Texas Instruments, Broadcom, NVIDIA, Qualcomm, AMD, etc. Another way to invest is to purchase ETF or exchange-traded funds. By doing this, you can bet on the whole semiconductor industry. In my opinion, it's much safer than buying stocks from individual companies. One Egg Semiconductor ETF (SMH) is the largest ETF for this industry. The current price is $219, about 31% down from its peak value. The total asset it managed is about $6.3 billion. This fund seeks to replicate the US-listed Semiconductor 25 index, which includes common stocks of companies in the semiconductor industry. These companies include Taiwan Semiconductor Manufacturing, NVIDIA, Texas Instruments, Broadcom, AMD, etc. All of them are leading companies in the world. By the way, if you want to magnify your profit, you want to check out the leverage ETF. The largest leverage ETF for semiconductor industry is Direction Semiconductor Bulls Retirement Shares (SOSL). Its current price is $12.9, a whopping 82% down from its peak value. This fund managed $3.4 billion. This Fund 6 daily investment result of 300% of the performance of ICE Semiconductor Index. It tracks the performance of the 30 largest US listed companies, like Texas Instruments, NVIDIA, Qualcomm, AMD, etc. What's a leveraged ETF? A leveraged exchange-traded ETF is a marketable security that uses financial derivatives and debt to amplify the results of the index. While a traditional ETF typically tracks the securities on a one-to-one basis, a leveraged ETF may aim for a 2-to-1 or 3-to-1 ratio. For example, Vanguard Standard Poor 500 ETF contains the 500 stocks in the standard pool. Typically, if the standard pool moves 1%, the ETF will also move by 1%. A leveraged ETF uses borrowed funds to buy options and futures to increase the impact of the price movements. In positive markets, it can magnify each percent gain in the standard pool to a 2% or 3% gain. Leveraged ETF is a risky strategy for investment. The following calculation will show you how a leveraged ETF works compared to the traditional ETF. First, let's assume it's a positive market. We have 10 weeks data for market movement. This section is for traditional ETF, and this section is for leveraged ETF. As mentioned before, when market moves 1% in traditional ETF, the corresponding market movement in a leveraged ETF is 3%. Based on the calculation, at the end of 10 weeks, traditional ETF has a return of $5, but 3 times leveraged ETF has a return of $15. On the other hand, in a negative market, when market goes down 5.2% for traditional ETF, the 3-time leveraged ETF will go down about 15.6%. The calculation shows the traditional ETF will decrease to $94.7, but the leveraged ETF will decrease to $84.1. So the leveraged ETF is a risky strategy for investors. However, if you are convinced there is a bull market coming, a leveraged ETF will significantly increase your profit margin.